Hi guys, in this video we are going to see the amendments relating to the TDS chapter, TDS and TCS. This is the fourth part of the amendments video. Before this, we've already seen the amendments in basic concepts, amendments in all the five heads, and also the amendments in chapter 6A. Alright, so here in this video, our focus is going to be on TDS and TCS. Totally four sections, four concepts we've got to learn through this discussion. Our very first discussion, the easiest amendment under TDS and TCS, is in section 194 IA. Now, section 194 IA, you must be aware, is the section that applies whenever I'm purchasing an immovable property. For that immovable property, if I'm going to pay less than 50 lakhs, I don't have to deduct any tax. But if I pay 50 lakhs or more than 50 lakhs, then I'm supposed to deduct tax at the rate of 1%. The buyer becomes a deductor over here. Buyer is supposed to deduct tax at the rate of 1%. Right? Let me depict the section over here. Section 194 IA. We have two people in the story. We have the buyer and the seller. Okay, the seller is selling some immovable property to the buyer. Now, this immovable property should not be rural agricultural land, and this transfer of immovable property should not be by way of compulsory acquisition, because if it is compulsory acquisition, you must be aware it gets covered under section 194 LA. So we have a separate provision for one compulsory acquisition cases. That is why 194 IA will not apply to compulsory acquisition. So under 194 IA, first of all, the buyer is purchasing some immovable property, not being rural agricultural land, from a seller. And this sale is not by way of compulsory acquisition, because compulsory acquisition cases, I will apply 194 LA instead. Now, for this immovable property, the buyer has to pay consideration, guys, right? So we will see what is this consideration. Is this consideration at least 50 lakhs? Even equal to 50 lakhs is covered, yes. If it is at least 50 lakhs, then the buyer becomes the deductor. The buyer will have to deduct tax at the rate of 1%. When does the buyer have to deduct tax? He has to deduct at the time of payment or credit, whichever is earlier. This was the section earlier. Now, the amendment is that we are not going to look at just consideration. We will compare consideration with SDV. Out of these two, we will pick whichever is higher. And that higher number we will compare with 50 lakhs. Whichever is higher, if this higher number is at least 50 lakhs, then the buyer will have to deduct tax under the head 194 IE. Alright, so I'm going to look at consideration or STV of the immovable property. Whichever is higher, if that is at least 50 lakh rupees, then the buyer will have to deduct tax at the rate of 1%. Earlier in 194 IA, we used to talk about only consideration. We never touched upon STV in 194 IA, but now we're going to compare consideration or STV, whichever is higher. Or if that higher number is at least 50 lakhs, then we're going to deduct tax at the rate of 1%. Now, this amendment gives rise to another question, that if I'm going to consider SDV over here, then TDS at 1% of what? Will you calculate TDS at 1%, still 1% of consideration only, or 1% of consideration or STV, whichever is higher? Even over here, we will consider STV. So TDS will be at the rate of 1% of whatever the consideration is, or STV, whichever is higher. Okay, so in simple words, in 194 IA, I will not look at just consideration hereafter. In every place in 194 IA, we will look at consideration or STV, whichever is higher. So if the consideration or STV, whichever is higher, if that higher number is at least 50 lakhs, then tax will be deducted at source at the rate of 1% of that higher number. Consideration or STV, whichever is higher. Right? Simple. This is the one simple only adjustment, only amendment in section 194 IA. Alright, rest of it remains the same. The transferor and the transferee, here both PAN is enough, TAN is not mandatory. 26 QB, then file the challan comes statement in form 26 QB within 30 days from the end of the month. All those provisions remain the same. All right, so please, but then do not forget over here, the section will not apply for rural agricultural land. It will also not apply if the transfer is in the form of compulsory acquisition. And what is the amendment? I'm going to compare consideration with SDV, whichever is higher, that whichever is higher number, if it is at least 50 lakhs, then I will deduct tax at the rate of 1%. 1% of what? That higher number. Okay, now let us take an example to understand this better. Let us say consideration STV. Let us say the consideration was 100 lakhs and the STV was, let us say, 40 lakhs. In that case, consideration or STV, whichever is higher, 100 lakhs. This 100 lakhs is at least 50 lakhs. So TDS will be 1% of this 100 lakh number, which will be 1 lakh. Now let us say the consideration is 40 lakhs and SDV is 70 lakhs. So whichever is higher, 70 lakhs is higher. So, and this 70 lakh is at least 50 lakhs. So you will see whichever is higher, and that higher number you will compare with 50 lakhs. Whichever is higher is 70 lakhs, that is at least 50 lakhs. So 70 lakhs into 1%, which is going to be 70,000, that's going to be our TDS. All right, taking the last situation, let us say the consideration is 48 lakhs and the STV is 50 lakhs. So which is higher now? 50 lakh is higher. The higher number, is it at least 50 lakhs? Yes, it is equal to 50 lakhs. So the TDS will be 50 lakh into 1%, which is going to be 50,000. So consideration or STV, whichever is higher, compare that with 50 lakhs. Okay, if that higher number is at least 50 lakhs, then yes, TDS under 194 IA is applicable, and it will be computed as a percentage, as 1% of what? Of that same higher number. Whichever is a higher number, of that higher number, you will calculate the TDS. At what rate? At 1%, to be paid when? At the time of payment or credit, whichever is earlier. Okay, so this was it about our discussion regarding section 194 IA. Now I'm taking you to the second section, the next section, a newly inserted section applicable first time to the May 2023 examination, section 194R. Section 194R talks about benefits and perquisites which are given to a person in such a way that those benefits and perquisites are connected to the business or profession of that some other person. See, I'll explain this section to you as well over here. Section 194R. The story would be something like this. Let us say there is a person, Mr. Blue, and there is another person, Mr. Green. This Mr. Green is carrying on some business or he's carrying on some profession. This Mr. Blue is giving to Mr. Green some benefit or some perquisite. This benefit or this perquisite is relating to the business or profession of Mr. Green. Now, if you are aware, if you recall, if a person receives any benefits or perquisites which are relating to his business or profession, then under section 28 subsection 4, that benefit or that perquisite will be taxable for this person. Right? So this person, Mr. Blue, is giving a benefit or a perquisite to Green. This Green is running some business or profession, and this benefit or perquisite is related to this business or profession. Generally, the rule is when a person receives any benefit or perquisite relating to his business or profession, then for this person, this benefit or perquisite is taxable under section 28(4). Let me give you an example first to help you understand this concept. Let us say this person, Mr. Green, he was a stationery seller. Okay? And ITC gave this stationery seller a deal. This person, Mr. Blues, let us say ITC, they gave a deal to Mr. Green, the stationery seller, that listen, if you are able to sell 1 lakh copies of classmate notebooks, then we will give you 1 gold coin. Okay, so what was the deal? ITC told Green, ITC and Green entered into a contract that if Green is able to sell 1 lakh copies of ITC's classmate notebooks, then ITC will give Green a gold coin. Okay, and Mr. Green was in the business of selling stationery products. He was able to sell more than 1 lakh copies of classmate notebooks, so ITC gave Mr. Green a gold coin. Now, this gold coin, thinking from Green's perspective, it's a benefit or a perquisite which Green got. And this gold coin is relating to his business of stationery, guys. He got this gold coin because he was able to sell at more than 1 lakh notebooks relating to his stationery business. So for Mr. Green, this gold coin becomes a benefit or perquisite relating to business or profession. For Mr. Green, it will be taxable under section 28(4). This was a concept that was existing till date. Now, what is the amendment? What is a new section? What does 194R say? 194R says if any person, Mr. Blue, ITC, if they're giving any benefit or perquisite. Now, this benefit or perquisite doesn't matter. This benefit or perquisite may be in cash, may be in kind, doesn't matter. So, in 194R, there is a person, ITC, Mr. Blue, they are giving a benefit or perquisite in cash or in kind to another person. This benefit or perquisite is going to relate to the business or profession of this person. Then this person who is giving the benefit or the perquisite, they will become the deductor and they will have to deduct tax at the rate of 10%. They will have to deduct tax at the rate of 10%. But TDS will come into the picture only if this benefit or perquisite has a value of more than 20,000 rupees. If the value is up to 20,000 rupees, even if it is equal to 20,000 rupees, there is no TDS. Only if it is more than 20,000 rupees, then tax will be deducted at source by the deductor at the rate of 10%. When? Not at the time of payment, not at the time of payment or credit, whichever is earlier. It's slightly different over here. Tax has to be deducted before providing the benefit. Before providing the benefit or the perquisite, even before that, tax has to be deducted. Only after deducting tax, Blue is supposed to give the benefit or the perquisite. See, if the benefit is in kind, then what will we do? For example, now here Blue ITC is giving a gold coin to Green. So here, how will they deduct tax? They can't keep a small piece of the gold coin, right? So here, in such cases, the deductor will require Green to first, pay the TDS amount. So if the benefit of the perquisite happens to be in kind, Green has three choices. If Green wants a gold coin, Green has three choices. Either Green has to himself, pay the TDS amount, pay 10% the TDS amount to Mr. Blue, first choice. Or second option, Mr. Green can pay advance tax to the extent of the 10% of the value of the gold coin and give the proof of the payment of advance tax to Blue. Or third option, Blue may himself bear the TDS. Three options generally Green has. Either Green has to pay 10% of the TDS amount to 10% of the value of the gold coin as TDS to Blue, or Green has to pay advance tax, whatever is the value of TDS on this gold coin, pay it as advance tax and give proof to Blue, or Blue may himself bear the TDS. Okay, so before providing the benefit or perquisite, tax has to be deducted at source. So giving you a revision once again, under section 194R, there is this person is giving a benefit or perquisite to another person. The person who is receiving the benefit or perquisite, Green, is carrying on a business or profession, and the benefit or perquisite is connected to that business or profession. Now, this benefit may be in cash or in kind. If the value of this benefit is more than 20,000, then the person who is giving the benefit should deduct tax at the rate of 10% before providing the benefit or perquisite. See, the deductor doesn't have to worry whether for Green it's going to be taxable under 28(4) or whether it's not going to be taxable under 28(4). That is not the worry of the deductor. The deductor, the only thing that he is going to see is, I'm giving a benefit or a perquisite to Green, and this benefit or perquisite is connected to the business of Green. That is enough. Now the deductor will deduct tax. It may be a case that this benefit or perquisite is actually not taxable for Green under TGBP. That is not going to be the point of discussion at all. Okay, the only thing which Blue is going to check is that I am giving a benefit or perquisite to Green, and this benefit or perquisite is connected to the business or profession of Green. Now, whether it is taxable, whether it is not taxable for Green under 28(4), that is not Blue's matter of thinking. All right, and this benefit or perquisite, this may also be a capital asset. It can be in cash, it can be in kind, it may be a capital asset. For example, it can be a land, it can also be a building, it can be anything. All right, it doesn't matter whether what I'm giving is taxable for green or not. I am giving something to a person, and that benefit or perquisite is relating to the business or profession of the assessee. I am supposed to deduct tax. Simple as that. When am I supposed to deduct tax? I'm supposed to deduct before providing the benefit or perquisite. Okay, now listen, let us go a little bit deeper. Who should this deductor be? See, either this deductor be any other person. If he is individual or HUF, I will cover only those individuals and HUFs whose preceding previous year turnover is more than 1 crore or whose preceding previous year gross receipts is more than 50 lakhs. The same provision you would have also learnt under 194A, 194C, 194H, 194I, 194J. In TDS, the same provision you would have seen in these sections, same provision I have even in 194R. If individual or HUF, I'm going to cover only those individuals and HUFs whose preceding previous year turnover was more than 1 crore or gross receipt was more than 50 lakhs. If non-individual, not HUF, any other assessee like company, firm, LLP and all, I'm covering all of them. But individuals and HUFs, I will cover only those individuals and HUFs whose turnover and gross receipts are more than these limits. Understood? Yes, taking you back to the theory now. Let us see what it says, 194R. Who is a deductor? Person providing benefit or perquisite in cash or in kind arising from business or exercise of profession by recipient. So for the deductor, what is the only thing that he's going to check? He's going to check, I'm giving a benefit or perquisite, and this benefit or perquisite is relating to the business or profession of the recipient. That's all. Now, if the value of this benefit or perquisite is more than 20,000, then the deductor will deduct tax at the rate of 10% before providing the benefit or the perquisite. Either the deductor be non-individual, not non-HUF. If he is individual or HUF, I will apply the section only if the preceding previous year turnover is more than 1 crore or preceding previous year gross receipt is more than 50 lakhs. Understood? Now listen, let me take you to the next set of points. See, under this section 194R is applicable only with effect from 1st July 2022. So how will you calculate now? When you're calculating the 20,000 limit, you will consider the period 1st April 2022 to 31st March 2023. When you're checking whether the total benefits and perquisites that are given by me to another person relating to his business or profession, when you're checking whether the total is crossing 20,000 or not, you will consider the entire year, even April, May, June, you will consider. But if, let us say, it is more than 20,000, which means you're going to deduct tax, but you're going to deduct tax only on those benefits and perquisites which are given on or after 1st July 2022. Does this make sense to you? When you're calculating the 20,000 limit, when you're going to check whether the total benefits and perquisites which I've given to Mr. Green, whether the total benefits and perquisites are more than 20,000 or not, when I'm checking, I will consider the entire year, even April, May, June, I will consider. Alright, but when I'm deducting tax at the rate of 10%, I will deduct tax only on those benefits and perquisites which were given on or after 1st July 2022. See, let me explain this concept to you with the help of this example. This Mr. Blue is giving benefits and perquisites to Green. Green is carrying on a business or profession, and these benefits and perquisites are relating to his business or profession. So, see, what are the benefits that Blue has given Green? On 1st May 2022, Blue gave Green a gold coin worth 10,000. On 10th July, he gave flight tickets worth 7,000. On 1st September, he gave a camera worth 5,000. On 31st Jan, he gave a watch worth 20,000. So there are 4 gifts given by Blue to Green. These 4 are benefits or perquisites given by Blue to Green, and these benefits or perquisites are relating to the business or profession of Green. So which means now Blue is going to become the deductor. Blue has to deduct tax before giving the benefit or perquisite. Now, whether tax has to be deducted or not, it depends upon whether the total value of these gifts, is it more than 20,000 or not. When you're checking is it more than 20,000 or not, yes, you will even consider the gifts which happened before 1st July 2022. You will even consider the gifts which happened before 1st July 2022. Even those gifts you will consider. Understanding? But you will deduct tax only on those gifts which were given after 1st July 2022. When you're seeing whether the benefits and perquisites are exceeding 20,000 or not, you will consider all the benefits and perquisites, even those benefits and perquisites which were given before 1st July 2022. But now that we know that yes, the total is more than 20,000, I'm going to deduct tax. I will deduct tax even on those benefits and perquisites. I will deduct tax only on those benefits and perquisites which were given after 1st July 2022. So when I'm checking the 20,000 limit, here I will consider the entire year. But when I'm deducting tax, I will deduct tax only on those benefits and perquisites which were after 1st July 2022. So this is going to be totally 32,000. 32,000 into 10%, 3,200 will be TDS under section 194R. Alright, so for the 20,000 limit, you will consider even transactions which happened in April, May, June, but you will deduct tax only on those benefits and perquisites which were given on or after 1st July 2022. Alright, this 10,000, I will not deduct tax over here, even though the total crosses 20,000, I will not deduct tax. Simple reason being, here this perquisite was given before 1st July 2022. Alright, so this was another important point under 194R. Now listen, if the value is going to be, if the benefit of the perquisite is going to be in cash, understandable, we can see how much cash, that will be the value of the benefit of the perquisite. But what if the benefit is in kind, like a gold coin, here camera, here flight tickets, watch? If it is in kind, then how will you find the value of the perquisite? If it is in kind, you will see, did the person who gave the benefit, is that person himself manufacturing those goods? Like, is he himself manufacturing the camera, or is he himself manufacturing the watch, or did he buy the benefit and perquisite from somewhere? If he bought it from somewhere, he will see what is a cost price, what is a purchase price, for how much did he purchase the gold coin, for how much did he get the flight tickets. That will be the value of the gift of the benefit or perquisite in kind. But if he is himself manufacturing, then you will see that the same goods, that if the same goods, if he sells to his customers, how much will he charge? So what is the price that he charges from his customers? That will be the value of the benefit in kind. I'll give you an example. Let us say the camera was purchased by Blue and the watch was manufactured by Blue. So the camera which is purchased by Blue, you will see at what price did he purchase. That will be the value which you will consider. The watch which Blue manufactured, the same watch if Blue had sold to a customer, for how much would Blue have sold? What would be the price that Blue would charge from a customer for the goods which he has manufactured? That will be the value that you will consider. Okay, so if the benefit of the perquisite in cash, you take the amount of cash, that will be the value of the perquisite. But if the benefit of the perquisite is in kind, you will have to see whether Mr. Blue, the giver of the benefit, is himself manufacturing that perquisite in kind, or did he purchase it from somewhere. If he's purchasing it from somewhere, see what is the purchase price, see what is the cost for which he purchased. That's going to become the value of the benefit or perquisite. But if he himself manufactured it, you will see at what price would he have sold it to his customers. What would be the price that he would charge from his customers? That will be considered as a value of the benefit or perquisite. But when you're considering the value of the benefit or perquisite, you will never include the GST element. The GST element will never be included in calculating the value of the benefit or perquisite. Alright guys, then listen to my next point. See, in case a special situation arises where principal loan is waived by the bank under one-time settlement scheme, then what are the tax implications? There are two people in the story. There is the bank and Mr. Green. Alright. Now Green is supposed to repay a loan to the bank, but Green is unable to repay the loan. Bank is waiving the principal repayment. Bank is saying, you just pay me the interest which has accrued till now. You don't have to pay the principal portion. So don't you think it's a huge benefit which the bank is giving Green? Green, you don't have to repay the loan principal amount. It is definitely a benefit or a perquisite that the bank has given Green, and the benefit or perquisite is relating to Green's business or profession. So for Green, it will definitely be taxable under 28(4). But principal repayment waiver will not attract TDS under 194R, provided this bank happens to be one of these: public financial institution, scheduled bank, cooperative bank, primary cooperative agricultural and rural development bank, SFC, SIIC, NBFC, and so on. If this bank happens to be one of these, then if this bank is waiving the principal repayment, if the bank is saying that you don't have to repay the principal amount, it is definitely a benefit or perquisite relating to business or profession. Definitely it's going to be taxed under 28(4) for Green, but under 194R, no need to deduct tax over here. Okay, then sometimes today, especially these social media influencers, they get a lot of things and articles from several brands, all right, and they get a lot of products from these brands. And these social media influencers, they're supposed to make an Instagram reel, or they're supposed to make a story, and they're supposed to post it on their profile, and for that they get paid also sometimes. All right, so now these products which are given to the social media influencer, again it is connected to their business or profession. It becomes a benefit or a perquisite which I'm getting relating to my business or profession. Now should 194R be applicable even over here? It depends. See, there are two situations possible. A brand is giving some products to a social media influencer. Now, two things are possible. The social media influencer, after he has prepared the reels, he is supposed to return the products to the brand, let us say. Then there is no benefit perquisite, guys, because he had to return it back. So therefore, there will be no TDS under 194R. But if the social media influencer does not have to return those products, if the social media influencer can keep those products, then it is definitely a benefit or a perquisite, and section 194R will apply. Understanding? So the social media influencer is getting products from a brand, definitely a benefit or perquisite for the social media influencer relating to his business or profession. But if the social media influencer has to return those products, then it is not connected to his business or profession. 194R will not apply, because it is not a benefit or perquisite anymore, because he has to return it. See, it is connected to business or profession, but it is not a benefit or a perquisite for the social media influencer, because he has to return it. He is not going to enjoy the products, not a benefit or a perquisite. Hence, 194R will not apply. But if the social media influencer gets to keep those products, then definitely it's a benefit or a perquisite which the social media influencer has enjoyed. There, 194R will apply. Now, these products are in kind. So, what will you check? How will you find the value? You will see, did the brand manufacture the products, or did the brand themselves buy the products from somewhere? If the brand purchased the products from somewhere, we will see how much did the brand pay for the products. That will be the value. But if the brand is itself manufacturing the products, then we will see the same products the brand will sell to customers at what price. That will be considered the value of the products. If the aggregate value of these products is more than 20,000 rupees, then at the rate of 10%, tax will be deducted at source by the brand before giving the benefit or perquisite. Understood till here? Yes. Now let me take you to another situation. This time, ITC told a stationery seller, you sell 1 lakh books of, 1 lakh classmate notebooks, I'll give you a car. The stationery seller sold the 1 lakh notebooks. ITC gave the car to the stationery seller. Definitely, it's a benefit or perquisite for the stationery seller, and that too relating to his business or profession. So, ITC will definitely deduct tax under section 194R. Okay, the value of the car was also more than 20,000 rupees. So, at the rate of 10%, before giving the car, ITC deducted tax at the rate of 10%. Either ITC bore the tax, or the stationery seller gave the amount to the ITC, or stationery seller paid the tax as advance tax and gave proof to ITC. One of these happened. So basically what I'm trying to tell you is ITC has given a car to a stationary seller. It's a benefit or perquisite relating to his business or profession, and ITC has deducted tax at the rate of 10%. Now see, the stationary seller becomes the owner of the car, and the stationary seller is using the car for the purpose of his business or profession, which means now the stationary seller will ask for depreciation, guys. Yes, look at the kind of situations that are possible here. The stationary seller will ask for depreciation. Now, this depreciation will be allowed to the stationary seller, and if yes, at what amount will you calculate the depreciation? We will definitely allow the depreciation because it is an asset, a depreciable asset being used for business or profession. So yes, definitely we will allow depreciation. But where will we get stuck? To enjoy depreciation, the asset has to enter the block first. And at what price will it enter the block? At what value will it enter the block? At the actual cost value. But what will be the actual cost of this car? Because the stationary seller did not pay anything to get the car. So at what value will it enter the block? You will see what was the value on which 194R tax was deducted. The value at which 194R tax was deducted, will you consider that? Or option number two, the stationary seller would be putting this car to tax under section 28(4) also, guys. Will you consider this? See, most of the cases, both of these numbers will be the same. But then to give the perfect answer in the examination, you will say that the actual cost will be whatever you're taxing under 28(4), that is going to be considered as actual cost, which results in the conclusion that if tax is deducted under 194R but nothing is taxed under 28(4), then it will not enter the block and you will not get any depreciation. See, I'll repeat again. You got the assessee stationary seller got a car. On this car, 194R tax was deducted. See, when ITC is deducting tax, I told you ITC will only check one thing. It's a benefit or perquisite, and this benefit or perquisite is relating to business or profession of the recipient, so I will deduct tax. Now, whether this benefit or perquisite is taxable under 28(4) or not taxable under 28(4) for the recipient, ITC won't check all that. So ITC just saw this is a benefit or a perquisite relating to the stationary seller's business. ITC deducted tax at the rate of 10%. Okay. Now, thinking from the stationary seller's perspective, this is a benefit or a perquisite that he has received relating to his business or profession. So under section 28 subsection 4, he is supposed to put it to tax. If he puts it to tax, then whatever value he puts it to tax, the same value will enter the block as actual cost, and on this number he can claim depreciation. But if he did not put it to tax under 28(4), if the amount that was put to tax under 28(4) is 0, then nothing will enter the block, then no depreciation. So the stationary seller, will he get depreciation on this car or not? See, technically speaking, he should get depreciation because he is using a depreciable asset for his business or profession. He owns the asset. It is an eligible asset. He is using it for business or profession. He should get depreciation. But we get stuck at the question that at what price should he get the depreciation? At what value? What amount should enter the block? Whatever amount is taxable for him under 28(4) relating to this benefit or perquisite, that same amount will enter the block also, which indicates if nothing is taxable under 28(4), nothing will enter the block, no depreciation. If let us say 50,000 rupees is taxed under 28(4), 50,000 will enter actual cost, depreciation will be on 50,000. Simple, guys. Whatever is being taxed under 28(4) for the stationary seller, that same amount will enter the actual cost also. On that same amount, the stationary seller will calculate depreciation. Simple story. Now understood? Yes. And then taking you to the last few points, in case a company is going to give you shares, let us say bonus shares, or if the company is going to give you rights shares, now these may be benefits or perquisites relating to your business or profession. For example, if you're a share dealer, if your business is buying and selling shares, then these bonus shares, rights shares will definitely be a benefit or perquisite for you relating to your business or profession. But these will never come under the ambit of section 194R. Okay, then even on cash discounts, on sale discounts, quantity discounts, and all which the seller gives you, rebates, even on all of these, section 194R will not apply. All right, so on all other benefits it will apply. For example, if a pharmaceutical company is giving, let us say, free medicines to the doctor, okay, then don't you think this is again a benefit or perquisite for the doctor, that too relating to his business or profession? So yes, the pharmaceutical company will deduct tax under section 194R. No doubt, pharmaceutical company is actually not supposed to give these free medicines to the doctor, because for the doctor, as per the code of conduct, he is not supposed to accept. For the pharmaceutical company, this expenditure will be disallowed. For the doctor, it's a benefit or a perquisite, it will be taxed. The pharmaceutical company will also, in addition to all these provisions, they will also have to deduct tax under 194R, because benefit or perquisite being given to the doctor relating to his business or profession. If the value of these free medicines is more than 20,000, then they will deduct tax at the rate of 10% before giving the benefit or perquisite. Sometimes, brands give you free tickets. Sometimes they sponsor your foreign trips. All of these will get covered under 194R, provided the aggregate value of benefits or perquisites which the brand has given you in that entire year has exceeded 20,000. If it exceeds 20,000, you will not deduct tax on just the excess. You will deduct tax on the entire amount. Alright, entire amount, but only those gifts which you got after 1st July 2022. Understood? Shall I run through the entire section for you now, section 194R? Listen to me. Here, a person, let us say a brand, is giving a benefit or a perquisite to a person. This benefit or perquisite is relating to the business or profession of this person. Now, in such case, the brand will deduct tax at the rate of 10% before giving the benefit or perquisite. This person who is giving the benefit of perquisite, either he be any other person, not individual, not HUF. If individual or HUF, I am going to cover only those individuals and HUFs whose preceding previous year turnover was more than 1 crore or gross receipts were more than 50 lakhs. Then we learned this section will apply only if the aggregate value of benefits or perquisites is more than 20,000. In that case, tax will be deducted at 10% before providing the benefit or perquisite. Okay, the benefit may be in cash, it may be in kind. If it happens to be in kind, then the person to whom we are giving the gift, this person, either he has to pay the TDS amount to the deductor in cash, or he has to himself pay the tax amount to the government straight away as advance tax and give proof to the deductor, or maybe the deductor himself may bear the TDS. Alright, then after all this we discussed that you will apply the section only with effect from 1st July 2022. That is, you will deduct tax at source only for those benefits and perquisites which were given on or after 1st July 2022. But when you're checking the aggregate value for the year, whether it has exceeded 20,000 or not, when you're checking that, you will consider even April, May, June. Then we learned if the benefit is in kind, then how will you find the value of the benefit? If the deductor himself manufactured those goods, you will see at what price would he sell the same goods to customers. If he is himself buying it from somewhere, you will see what is the purchase price, for how much did he buy. This will become the value of the perquisite, but we never consider the GST element we said. Then we discussed about social media influencers. If they have to return the products, then it is not benefit or perquisite, no 194R. But if they can keep the products, then it is definitely a benefit or perquisite, 194R will apply. Then we learned if the stationery seller, if the assessee has received a car from a person, it was subject to 194R, let us say, and the assessee has also taxed it under 28(4). Now, can the assessee claim deduction on claim depreciation on this car? The car is being used for business or profession. Car is an eligible asset, so yes, depreciation can be claimed. But the question is, on what amount will the depreciation be claimed? Whatever is taxed under 28 subsection 4, the same amount will also enter the block as actual cost, and on this amount you will get depreciation, which indicates if nothing is taxed under 28(4), nothing will enter the block and no depreciation. Then we learned if company is going to give bonus shares and rights shares, it will never come under 194R. Cash discounts, sale discounts, rebates, quantity discounts also will not come under 194R. And finally, we had seen one last example. If the pharmaceutical company is going to give free medicines to the doctor, for the doctor it is definitely a benefit or a perquisite which is relating to his business or profession. So these free medicines, if their value is more than 20,000, then the pharmaceutical company will deduct tax under 194R. See, relating to this one transaction, so many provisions are applicable. First of all, for the doctor, section 28(4), under this, the value of the medicines will be taxed. Then, for the pharmaceutical company, the expenditure, whatever is of expenditure in giving these medicines, that expenditure will be disallowed for the pharmaceutical company. Why? Because pharmaceutical, remember in the second video we had learned, in the second amendments video relating to PGBP, we had learned that this is nothing but pharmaceutical company is giving a benefit or a perquisite to a person in a scenario where the law doesn't allow this person to accept this benefit or perquisite. So whatever expenditure I am incurring in giving that benefit or perquisite, it will be disallowed for me. And also for the pharmaceutical company, section 194R will apply if the value of the medicines exceed 20,000. They'll have to deduct tax at source. Got it, guys? Yes. So these were our two amendments relating to TDS. Our first discussion was under section 194IA. We said that now even SDV we will consider in 194IA. Consideration or SDV, whichever is higher. And a second amendment was relating to section 194R, a new section altogether, which talks about benefits or perquisites being given to a person relating to his business or profession. 20,000 is a limit, 10% is a TDS rate, applicable only with effect from 1st July 2022. Now I'm taking you to the last two amendments under TDS. We have just two more, section 206AB and section 206 CCA. If you're able to understand 206 AB, the same thing is applicable even in 206 CCA. The only difference, 206 AB is applicable to TDS and 206 CCA is applicable to TCS. Okay, the provision goes like this. 206 AB says, in case the deductee, I'm talking about the deductee, okay, the person to whom we are giving the income and we're deducting tax from his income. The deductee we're talking about, if the deductee has not filed his income tax return for some preceding previous year and total TDS TCS credit for that assessee is at least 50,000 in that preceding previous year, then we will deduct tax at 2 times the prescribed rate or 5%, whichever is higher. I know it's confusing. We'll see it over here. We'll understand it better. Section 206AB. Let us take an example. The tenant and landlord. Tenant is paying rent to the landlord. So the tenant becomes the deductor and the landlord becomes the deductee. Okay, tenant is paying rent for some land and building, let us see. All right. And this is relating to the tenant's business and profession and all. In other words, I'm talking about section 194I being applicable. So the landlord, the deductee, if you look at him, there is some preceding previous year. Which preceding previous year I will tell you. Some preceding previous year he did not file his income tax return. And in that preceding previous year, this deductees TDS plus TCS credit. You know what is TDS, TCS credit, right? Others have deducted tax from his income. Others have collected tax from him already. To that extent, he doesn't have to pay tax during filing his income tax return, self-assessment tax. Again, he doesn't have to pay this much. So his TDS, TCS credit for that preceding previous year is at least 50,000 rupees. If these conditions are fulfilled, then when the tenant is deducting tax on this rent, the rate will change. The TDS rate will be 2 times whatever the specified rate is, or 5%, whichever is higher. Now for land and building, in 194I, the TDS rate is 10%. So 2 times the applicable rate or 5%, whichever is higher, which will obviously be 2 times 10%, that is 20%. At 20%, we will deduct tax. So 206 AB says, deductor before deducting tax hereafter, please check. Please check whether the deductee has filed income tax return in the earlier years properly. If he has not filed his income tax return for some year, and in that year TDS TCS credit is at least 50,000, then deduct tax at 2 times the specified rate or 5%, whichever is higher. Now coming to the question, which preceding previous year are we supposed to check? See, we are supposed to look at that preceding previous year for which ITR due date has lapsed. Your May 2023 examination, the previous year in the examination will be 22-23. See, which is the preceding previous year before 22-23 for which 139(1) due date has lapsed? See, it is not 21-22 because 21-22's due date will be in 22-23. So, which preceding previous year the 139(1) due date has lapsed before 22-23? You will say preceding previous year 2021. In simple words, you're supposed to look 2 years back. 2021's turnover you will see. 2021's income tax return you will see. Did he file the income tax return? If he did not file the income tax return and also in 2021 his TDS TCS credit was at least 50,000 rupees, then the tenant will have to deduct tax at 2 times the specified rate or 5%, whichever is higher. So we are putting responsibility on the deductor that before deducting tax, please check. Please check whether your deductee has properly filed income tax return 2 years back or not. The amendment here is, even earlier we had the section, but earlier we used to say check last 2 years, which means we would have checked 2021 and 21-22. But now we are saying check only 2021, check only the year whose ITR due date has been lapsed is over even before the year started. So even before 22-23 started, even before that 2021's ITR due date only would have lapsed. 21-22's due date will be during 22-23. Right, 21-22's due date will be 31st July 2022, 31st October 2022, 30th September 2022. So during 22-23. So you are supposed to take that preceding previous year. The income tax return due date of that preceding previous year should be over before our current previous year. That is, we're supposed to see 2 years before. So 2021 you will check. 2021, did the deductee file his ITR properly? If he did not file his ITR, also TDS TCS credit is at least 50,000, then the deductor, the tenant, should deduct tax at the rate of 2 times the specified rate or 5%, whichever is higher. But please remember, this section is not applicable if the deductor is deducting tax under section 192 salaries or section 192A TDS on RPF withdrawals, or if he is deducting tax under section 194B TDS on lottery winnings, card game winnings and all, section 194BB TDS on horse race winnings, then 194N cash withdrawals. To this list, they have made an amendment. Some more sections they have added. This section is also not applicable when you're deducting tax under 194IA. Also not applicable when you're deducting tax under 194IB, rent which is not covered by 194I, individual HUF. Also not applicable under 194M. 194M, contract payment, commission payment, then your professional fees payment not covered by 194C HJ comes under 194M, 50 lakh limit, 5% TDS, that one. So 206AB, you will not apply this section if you're deducting tax under these sections: 192, 192A, 194B, 194BB, 194IA, 194IB, 194M and N. Very easy to remember. See, how will you remember? I'll show you again. Section 192, 192A, then 194B, 194BB, make pairs. Then 194IA, 194IB, and 194M, 194N. To these 4 pairs, this section will not apply. So if you are deducting tax under these 8 sections, then you will not check whether deductee filed ITR properly or not. Simple. One quick revision. I am deducting tax. I am the deductor. Before deducting tax, other than these 8 sections, any other section, if I am deducting tax, before deducting, I should check whether my deductee 2 years back, did he file his return? If he has not filed his return properly and if TDS TCS credit is at least 50,000 for the 2 years back year, then I will deduct tax at the higher of 2 times the specified rate or 5%, whichever is higher. But here we can also complicate a little bit. See, exam perspective, if we think, especially MCQs and all, they can complicate a little bit. They can say, what if, see, they can give a question where 206AB is also applicable, 206AA is also applicable. See, what is 206AA? The deductee is neither giving his PAN number nor is he giving his Aadhaar number. Then what do we do? In that case, what will the TDS rate be? TDS rate will be whatever is the rate specified in that section or 20%, whichever is higher. Only in section 194O and section 194Q, instead of 20%, you take 5%. This is 206AA, right? So, what if 206AB and 206A both are applicable? Let us take an example. Same rent example I'm taking. 194I, can I apply 206AB? Yes, 194I is not excluded in these sections. So yes, I can apply this section 206AB to 194I. So the tenant is paying rent to the landlord. Okay, he checked. In 2021, the landlord had not filed income tax return and TDS TCS credit was also at least 50,000 rupees. Okay, and which means 206AB is applicable. And also the landlord is neither giving PAN number nor is he giving Aadhaar number, which means 206AA is also applicable. In such case, if both are applicable, you will apply both and you will pick whichever is higher. What will 206AB say? 206AB will say, if these conditions are fulfilled, then 2 times the rate, 2 times 10%, which is 20%, or 5%, whichever is higher, 20%. What does 206AA say? The rate 10% or 20%, whichever is higher, 20%. So 20 or 20 of two numbers, out of these two, whichever is higher, here we have the same, so 20%. Otherwise, if 206AB and 206AA both are applicable, then out of the two, you will pick whichever is higher. You will apply both. You will see what is the rate under both and you will pick whichever is higher. Understood? Yes. So 206AB applies when these 8 sections are not applicable, first of all, and the deductee has not filed his income tax return 2 years back. Also, TDS TCS credit for that year is at least 50,000. In that case, the deductor will deduct tax at 2 times the specified rate or 5%, whichever is higher. If the deductee is also not giving PAN and Aadhaar, neither he is giving PAN nor he is giving Aadhaar, then 206AA will also apply. Under 206AA, the deductor will deduct tax at the rate or 20%, whichever is higher, only for 194O and Q, 5% instead of 20%. So if 206AA is also applicable, you first apply 206AB independently and you arrive at the rate. You apply 206AA independently and you arrive at the rate. Both of these, you pick whichever is higher. Understanding? Do not be surprised if you get a complication like this in your MCQs in your upcoming May 2023 examination. Highly probable. Understood? Now, same thing I will talk about even in TCS. Even in TCS, instead of 206AB, we have 206CCA. I am the seller. I am supposed to collect tax from the buyer. I will see 2 years back. Did the buyer file his income tax return properly? Is his TCS credit at least 50,000 in that year 2 years back? If yes, then I will collect tax at 2 times the specified rate or 5%, whichever is higher. Same thing, guys. In case 206CCA is in case 206CC is also applicable. What is 206CC? Just like how you have 206AA in TDS, where you don't give PAN, you don't give Aadhaar, you don't give either. If you don't give either of them, okay, then 206CC will apply. 206CC says 2 times of the rate or 5%, whichever is higher. So 206cc or 206cca, both you will apply. You will pick whichever is higher. Same thing that we learned under 206ab, same thing even over here. Shall we do a revision from TCS perspective? Automatically, even 206ab will get revised. Listen. See, let us take a situation. What am I explaining to you? 206cca. Okay. Seller, buyer, two people in the story. The seller is selling goods to the buyer, and let us say for the goods the buyer is paying consideration. Along with consideration, the seller is collecting TCS also. Okay, so the seller is a collector. Now the seller will check 2 years back. If the current previous year is 22-23, we will check 2 years back, that is previous year 2021. You know why 2 years back, right? Because we will check that preceding previous year for which 139(1) due date is already over before the current year has started. So preceding previous year 2021, we will see did the buyer file his income tax return. He did not file his income tax return, and also his TDS plus TCS credit for this year is at least 50,000 rupees, let us say. So which means section 206 CCA is applicable. Now the seller will collect tax at what rate? Same thing. Seller will collect tax at 2 times the specified rate, 2 times the specified rate, or 5%, whichever is higher. But let us say the buyer is also neither giving PAN number nor is he giving Aadhaar number, which means section 206cc will also apply. 206cc says 2 times the rate applicable or 5%, whichever is higher. Instead of 5%, we will take 1% for 206c 1H. There, instead of 5%, we take it as 1%. So let us say these goods were, scrap. Okay, so for scrap, what's the TCS rate? 1%. So I will first apply 206cca. Why will I apply 206cca? Because buyer 2 years back did not file ITR. Also TDS TCS credit was at least 50,000. So the seller, the collector will apply 206cca 2 times the specified rate. For scrap, the specified rate is 1%. So 2 times 1% will be 2%, or 5%, whichever is higher. Which is higher? 5%. Alright. Then we will also have to apply 206cc because the buyer is neither giving PAN nor giving Aadhaar. So under 206cc, it will be 2 times the rate again, which is 2%, or 5% again, whichever is higher. So which is higher here? 5%. So I will apply both the sections and I will pick whichever is higher, which is 5%. Same over here. Getting it? So if 206cca and 206cc are both applicable, apply them both and pick whichever is higher. That's it, guys. So totally, there are 4 amendments under TDS chapter. 194IA, which says we will not only look at consideration, we will also look at SDV hereafter. And then number 2, 194R, a new section altogether, a brand new section introduced, which talks about I am giving benefits or perquisites to a person in such a way that the benefits or perquisites are relating to that person's business or profession. So if the value of the benefit or perquisite aggregate in the year is more than 20,000, I have to deduct tax at the rate of 10% before giving the benefit or perquisite. Right? Then we learnt about 206AB and 206CCA, which ask the deductor and the collector to check 2 years back. Did the deductee or the buyer file income tax return properly? If he did not file ITR properly, also TDS TCS credit is at least 50,000, then the rate will change. The rate will be 2 times the rate or 5%, whichever is higher. If PAN Aadhaar also the buyer or the deductee is not giving, then 206AA will also apply in case of TDS. 206CC will also apply in case of TDS. See, before I close, I just want to give you one last concluding flowchart. In case you are wondering about 206AA and 206CC, let me give you one quick flowchart. See, 206AA applies when the deductee is giving neither his PAN number nor is he giving Aadhaar number. At least one if he gives, won't apply. 206cc will apply when the buyer is neither giving PAN number nor is he giving Aadhaar number. By now you would have concluded that 206AA is a TDS section and 206cc is a TCS section. If he is neither giving PAN nor Aadhaar, then you will see which section are you deducting tax under. If you're deducting tax under 194O or 194Q, then you will see what is the rate which is applicable in that particular section, or 5% you will pick whichever is higher. If it is any other section, you will see what is the rate prescribed in that section, or 20% whichever is higher. Okay. If it is 206cc, that is if it is TCS and if the buyer is not giving PAN or Aadhaar, you will see under which section are you collecting tax. 206C1H. If it is 206C1H, you will pick the rate, or 1% whichever is higher. If it is any other section, then you, 2 times the rate, okay. If it is any other section, 2 times the rate, or 5% whichever is higher. This is 206AA and 206cc. Alright, so I think with this we are good to close this video. In the next session, I will be discussing with you the leftover amendments. We have a few amendments left to discuss from the assessment procedures chapter. Alright, we have one big huge amendment on updated return left, 139A. We will take that up in the next session tomorrow. Alright, thank you guys.